Well, happy Monday to you. Thank you for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. I am pleased to be joined by none other than Brian Hoops, the president of Midwest Market Solutions, and he just happens to hail from Springfield, Missouri. And to that end, I say congratulations to Chiefs Kingdom in Missouri. That was quite a weekend. You and I were talking before we came on the air, kind of an anticlimactic finish, but all in all, that was a pretty good representation of the league, the way everything finished up last night.
Well, it was, Marlon. The last minute or so was a little anticlimactic with the the unfortunate penalty and bleeding the clock. But up until then, it might have been the best Super Bowl game ever that we had seen. So certainly one of the best games up until that last minute or so. But a lot of fireworks going off here in Springfield last night after the Chiefs won. So a lot of people celebrating.
Interesting. And the thing that I always enjoy about that particular weekend is we always run stories on here about the tremendous food consumption that's always associated with a big game weekend like that. And boy, the grocery stores were very busy over the weekend. That was great to see. All right, let's talk about this setup from the overnight trade. And I want to take a look at our overnight quotes on the Globex with our quotes provided by Bar Chart here. So let's take a look at, well, what was going on with the corn market first. Down just a penny and a quarter at 6.79 and a quarter on the March. December down 3 cents, so on the new crop. On the soybean trade here, you had the March down a penny and a quarter at 15.41 and a quarter. Now, I looked just a few minutes before they had wrapped up the overnight trade, and they were actually a little bit higher. So they chopped around on both sides of unchanged. And we had the July contract finishing up only one tick lower. Switching over to the November new crop soybeans overnight, we were a penny and a quarter higher at 13.80. So they didn't venture very far from unchanged in the Globex session here. On the wheat trade in Chicago, you had March 7 3/4 lower at 7.78 and a quarter. Well, that had quite a bit of pressure behind it, and July was down 7 1/4 as well. Kansas City wheat, well, you had March down 9 3/4 at 8.99 and a quarter. Under $9. Brian, how significant is that?
Yeah, the wheat market pulled back a little bit. We had this huge surge on Friday, but there's moisture in the forecast for the winter wheat plains this week in the form of some snow. So that looks to help this crop out. And again, we did not have commitment to traders on Friday afternoon, second consecutive week. So the big bullish fundamental is how short the funds are in the wheat and how much are they going to cover. We don't know if they've covered all their shorts. We just don't know where they're at. We expect that they've covered some, but probably not all of their wheat shorts. We expect that they're long a record amount of soybean meal, possibly soybeans as well. We were sharply higher on Friday in the beans because there was some rumors that China was in the market for U.S. beans, but we don't have any confirmation of that at this point in time. In fact, tensions, it looks like, again, escalated over the weekend as U.S. shot down more balloons or flying objects of some sort. I don't know that they're releasing all the details yet, but there was 3 more things that were shot down over the weekend, and it's all pointing back to China. And that's not good news when the tensions are increasing for U.S. soybean relations and them wanting them to buy our product going forward.
Let's check out what happened in the spring wheat trade overnight. It looks like, well, here we're down about 4.5 cents, and we had a last trade of 9.25 3/4, while July was down 6.5 cents. Yeah, the Chinese media was saying over the weekend that they want to increase their own soybean production in the country and become more self-sufficient in their soy meal needs. We'll see how that affects the market moving forward here. Brian, we'll come back in a moment, and you and I will discuss what's going on in the livestock trade. So we had a little higher cash cattle market before the weekend, and we'll talk about that next. All right, let's continue our talk with Brian Hoops, the president of Midwest Market Solutions. Now, Brian, let's recap what we ended up with on the cash livestock trade out in the plains late last week. Now, it took a while. Once again, it's been doing that several weeks. It takes a while to really get that trend established. So on the price board from the cash market, we had live sales at 159 to 161. Now, I believe Thursday we may have had some as high as 162. Dress basis sales, it looks like they're 254 to 256. Brian, overall, wouldn't that be a couple of bucks over what we had the previous week yet again?
Yeah, absolutely, it would be. I think the bulk of the sales in the South were 159 to 160, so that's at least $1 to $2 higher. And if we saw some 161, now you're looking at $3 better in some cases. The dress trade was about 250 the prior week, so you're looking at $4 to up to $6 better.
Wow.
And so there's a real good jump in the cash markets last week. But interesting, the futures did close a little bit softer for the week, and this week we're looking at probably a stronger cash market once again. Now, one negative that I want to point out was the slaughter pace last week only was around 639,000 head, a little bit disappointing number there that they didn't kill more cattle. So we hope that they kill a little bit more cattle this next week, but it is helping our boxes prop up just a little bit. The fact that they're not killing as many cattle, in that 650 to 660,000 range. But yeah, that's kind of the goal, is to get to that 650 range each week. They were below it last week. We're going to start the week off probably in that 125 to 126 kill week. And really what's going to get down to is how big is the Saturday still going to be.
Well, and on the box beef values, if we take a look at those from Friday afternoon, according to USDA, they were higher again on the beef side, and we were up 37 cents on choice. We were up 28 cents rather on the selects. That 269.66 compares to 264.74 the week before, so now they're at it again, about $5 higher again. Let's look at where we finished up last Friday on the futures and on the big board as we headed into the weekend. Let's take a look at live cattle first. April were 32 higher at 163.95. They were higher across the board, led by the nearbys. Feeder cattle were weaker across the board, but not much. You had April just down a nickel Friday afternoon. And on lean hogs, it was a mishmash, a mixed bag. You had the April contract unchanged at 83.32 as we headed home. Brian, thanks for helping us analyze the pre-open here this morning. Look forward to the start. Appreciate it. You have a great week. Brian Hoops of Midwest Market Solutions with us.